April was the slowest month for home sales in Kelowna and the Okanagan in 4 years. Overall sales were down 3.6% from a year ago, and detached home sales dropped even harder at 7%. Spring is supposed to be when this market wakes up, and it hasn't. And buyers are still sitting on the sidelines waiting for prices to fall. But here's the problem with that strategy. Inventory is actually tighter this year than it was last year. So, with fewer homes available and sales already soft, what's actually happening to prices? Are they dropping? Are they holding? Or are they starting to recover? That's exactly what we're going to break down today. We'll go through single family homes, condos, and townhomes and look at where prices are sitting right now compared to this time last year and last month. And then I'm going to tell you what this data actually means if you're thinking about buying or selling in this market. Starting with the number of residential sales, you can see the red line is 2026. We were trending a little bit higher than we were in 2025 to start the year, but you can see in April, sales dropped 3.6% year over year and is the slowest year we've had in the last 4 years. Typically in the spring, sales start to pick up, and though we were up a little bit month over month, we typically see more growth from March into April. And if we break this down by subcategory, you can see that single family homes were down 6.9% year over year, and the sales in the townhome department dropped over 10% year over year. Even condos were down 4%. And if we're thinking, well, the market itself was only down 3.6%, that includes the total market, which includes lakefront property, acreages, and mobile homes. Here, we're just looking at these three subcategories. And as I mentioned at the start, inventory this year is a little bit tighter than it was last year. We have, quite a bit less inventory, probably 500 to 600 fewer units available on the market right now as we did this time last year. So if we break that down into the months of supply, how much inventory we have, in the single family detached home market, even though sales were down a little bit, because inventory is getting tighter, we're sitting at 6.8 months of supply. And remember, months of supply means that if nothing else got listed on the market at the current sales pace, how long it would take out to sell the current inventory. So 4 to 6 months of available inventory is basically a balanced market. The single family detached home market is getting closer to that balanced market. We're getting into the sixes, which is down from where it was the previous month. Still considered a buyer's market, but it is getting closer to that balanced market. And in a balanced market, there's not a lot of pressure on prices to go up or to come down. So it'll be interesting to see what prices are doing when we get to that slide. In the townhome market, this is still a buyer's market at 7 months, which, because sales were down so much year over year, we were actually increasing the months of supply from the previous month. And in the condo market, we're sitting around 8.4 months of available inventory, months of supply, and that still puts us in a buyer's market. This has improved from where it was a few months ago. I think around December, we were well over 10 months of available inventory. So just to recap, we are in a buyer's market across the market, and we have been in this buyer's market for a good couple of years. So let's have a look at what it's doing to prices. We'll start with the composite benchmark price. This is the benchmark price of all asset classes combined together. Last April, it was at about $797,000, and this year, a year later, we're at $798,000. That price has gone up 3 of the last 4 months after we saw a steady decline in the last half of 2025. So you could say, though, over the last year, prices overall in the market have not changed. And if we stretch this out over the last 5 years, yes, it's down 12% from the market peak still. But over the last 18 months, 24 months, there hasn't been a lot of change in this price. We're at $798 now, we were at $773 last December, and even if you go back to 2023, which was the bottom of that correction, we're still only about $25,000 higher than we were at that point. Moving on to the single family detached home market, This price hasn't changed much month over month. We're up a total of $2,000 from where we were in March. So more or less a sideways move. And if we go back over the last year, it's only down 1% or $11,000 from where it was this time last year. Taking a look at the graph, we are close to that price we were last April. It did go up the market last spring. It kind of topped out there in August and it did drop for a few months. Then we saw some growth from November through to January, a little bit of softening, but from March to April, it was more or less a lateral move in the price of a single family detached home. And this could have a lot to do with us getting closer to that balanced market in this segment of the Kelowna market. Still, we'll look at the last 5 years. The price is down 13% from the market peak. But much like the composite price, there hasn't been a significant amount of change over the last 2 or 3 years. We are higher than we were when the market bottomed out back in January 2023, but we are down a little bit from where it was in June of 2025 by about $40,000. Taking a look at the townhome market, this one too came down 0.2% month over month, so basically a lateral move. In April, this price came in at $724,000. And going out over the last year, it is down 1.5% year over year, down from $735,000 this time last year. And if we look at the graph, there has been a lot more volatility in the townhome market than in, say, the single family detached home market. But looking on the far right there, we did have a lateral move from March to April. We did have a lateral move from December through to February too before prices came back up. But on a month-to-month basis, there is a fair bit of volatility here. Stretching it out over a year, it is down about $10,000 from where it was this time last year. And if we look at the last 5 years in the townhome market, we are down 13% from the market peak, but we are a little bit higher than we were in March 2023, which was the bottom of that correction. It's very interesting to see those big jumps and drops over the last 6 months, but I think as this year stretches out, we'll see a bit more of a trend in what direction this is actually headed. In the condo market, we had a huge jump from March to April. 5.5% price appreciation going from $471,000 to $497,000, which is a big jump. This could have to do with that month of supply starting to tighten up in the condo market. But if we go out over the last year, we are still down 2.3% from where we were this time last year. So that tells me there's been some volatility over the last 12 months in this market. So let's take a look at that next. Here we can see that since last April, yes, we're down about $12,000, but this market did have a steady decline over the last half of 2025. There was some price appreciation from December to January up to $504,000, but then it dropped again in February, telling me that that January price was a bit of an anomaly. We had a sideways move from February to March, and prices jumped up again 5% from March till April. So either we've had 2 months of an anomaly, or this is the market pushing against that resistance around $500,000. We may see over the next few months that it kind of hovers around that $500,000 mark, especially since the months of supply is starting to tighten up. Stretching that out over the last 5 years, we are still down 10% roughly from the market peak price, but we are up from where the bottom of the last market correction was. But you can see here, there's a lot of volatility in this condo market, especially if you're just looking month to month. So it's better to have a look at a few months and see what trends lines are emerging from here. Lastly, we'll look at the price ratio. This is the price that a home ultimately sells for versus its last listed price. So on average, buyers are getting or can expect to get about a 3% discount from what the last listed price was reflected in their final selling price. Here's what this all comes down to. If you've been sitting on the sidelines waiting to buy, especially if you're renting right now, the data tells a clear story. Prices are almost exactly where they were a year ago. You've essentially waited 12 months and the pricing hasn't moved much. So unless that time allowed you to save a larger down payment, waiting hasn't worked in your favor. Inventory is slightly tighter, and that pressure isn't going to ease as fast as some people expect. And if you're a seller in this market, the number you need to understand is this. Roughly 12% of listings are selling each month. That means the odds are already stacked against an overpriced property. I always come back to the 3 Ps when we talk about selling: product, price, and promotion. If your product is in good shape, the biggest lever you have right now is price. That's where deals get made or don't get made in a market like this. But I want to hear from you. Drop a comment down below. Do you think prices in Kelowna still have further to fall, or are we close to the bottom? I'm actually curious where people's heads are at right now. And if you found this video useful, give it a like and make sure you're subscribed to the channel so you don't miss out on next month's update. Thanks for watching. We'll see you next time.